myself Vaibhav. In today's session of Visual JForex, I will be making you familiar with the indicator named Stochastic Rsi. This is, you can say, the derivative after including both stochastic as well as the RSI characteristics. So this is, you can say, a hybrid of both these indicators, and we will see how to deploy these algorithmic setup using the stochastic RSI. So we will see these indicator blocks and its use on the Visual JForex platform to design and develop the system which will be running on its own, and it will save us the trouble of trading manually. Here we don't really have the description for the blog, so we straight away head to the Visual JForex board developed by Dukascopy Bank SA. It has made the life simpler, lot simpler for us. All we have to do is go in the indicator section. There in the momentum indicator listing, we have the stochastic RSI. At the very bottom, this is the last indicator of the momentum series. And in next session, we will be looking at the indicator from different category. As you might be aware by now, any of these start point can be chosen for the use of the setup. So here we are taking the on tick as our start point. Now coming to the input parameters, before that I would like you to take a look on this formula. It's fairly simple. What we have to do is simply replace the RSI value for last 14 time period, or whichever time period you chose to define the RSI. So instead of taking the closing value and deriving the stochastic values, we use the RSI values and then calculate for the same uh, formula which by which we arrive at the stochastic. So only the closing price of the candlestick is being replaced by the RSI value, and then we are using the old formula of the stochastic to come at the values, the output values for the stochastic RSI. So here, as you can observe, this is fairly simple. We take the 14 time period, or whichever time period we choose, we calculate the RSI, then we take the minimum RSI value and the maximum RSI value over the defined time period for the K, for defining the fast K. Suppose if, for example, it is 5, then we will take the minimum RSI value and the maximum RSI value over last 5 candlesticks period, and then we will calculate using this formula, and we will arrive at the stochastic RSI. So it's fairly simple to understand, but it's very useful. I will explain to you on the chart as well. There it will be a lot easier for you to see how we can deploy these indicator for successfully finding the trading opportunities both for buy as well as the sell. So here it is, stochastic RSI. Now the default values, as you can see, the RSI is being calculated on the last 14 candlesticks period, whereas the fast K value is being calculated for last 5 candlesticks period, and the fast D value is being calculated for last 3 candlesticks period. And I hope you are well familiar with how we calculate the fast K and the fast D. As I explained to you, fast K is using this formula, whereas the fast D is simply the SMA of last 3 fast K values. So we are taking the SMA here. You can change the SMA type. The moving average can be different. You can choose EMA, T3, DEMA, or TEMA. So it's always up to you. You can experiment with the different moving averages and see which one suits your purpose of finding the profitable trading opportunities. For that, you will have to do the experimentation kind of trial and error, and see which combination works better. You will have to do a lot of testing also on the historical data to arrive at statistically significant combination for finding out the entry points. So here we are going to use in today's session the Euro USD as our instrument of choice, and then we will see how we can modify these stochastic RSI parameters to arrive at fairly profitable indicator setup. I will show you on the different time frame and the changes which will be visible as we change the input parameter values. So let's go to the edit part, and before we experiment with this, I would like to remind some of the popular trading strategies which are used with stochastic RSI. As you might be well aware, we have these values, the fast K and fast D values oscillating between 0 to 100. So here we have the range for 100 points, and anything below 20 is considered as oversold, and anything above 80 is considered as overbought. And whenever we see that change in momentum is happening, whenever we see the crossover after having been in extreme values, we see it as a entry point, we see it as a fresh opportunity where the trend is changing, and this might be the time for us to get involved. But there is one caveat here, that many times what happens when the momentum is strong, we can get caught on the wrong foot. We might keep anticipating that the momentum is going to shift, and the stochastic is also telling us the same. But in reality, that doesn't really happen. The value, the underlying instrument's price action keeps going in the same direction, and to avoid such scenarios, we have to be careful and incorporate some other indicators, or we have to define the stochastic values accordingly, the parameters accordingly, so that we don't really get involved in too many losing trades. So that's why finding out and figuring out any profitable trading setup is a fairly tricky job, and you have to spend a lot of time and effort to arrive at any decently profitable trading setup. So here the stochastic values gives you an idea of on which direction the momentum is. As I said, if the fast K value is above fast D value, then the momentum is considered generally on the bullish side. If the fast K value is below the fast D value, then that is considered as a bearish signal. But as I said just a while back, we have to be careful that this indicator might also end up misleading us. So we have to keep track of that as well. And as I said, we have to use this indicator with in conjunction with the other trend identifying indicators also. But it's a good indicator, and all we have to do is see what kind of input parameters will give us better idea of the momentum being observed in the underlying instrument. So here we will do some experimentation. We will try to define it for different time horizons, and see what kind of changes are observed as we change the value. As I change the fast percent K period to 15, you can observe on the chart we have lot different plotting of these stochastic RSI. Here we can change the fast percent D period as well. Say for example we make it 10, and we can even change this moving average type. Instead of SMA, you can choose EMA, you can choose WMA or DEMA. As I said, you have pardon me, you have to arrive at the combination which is likely to prove most profitable. So here, let's for example take T3, and as you can see, we have the plotting of the stochastic RSI is lot different than what we were looking at when we were simply using the default values. And this is what happens when you change the parameters and try with different combinations. And one of the combination is likely to give you the good idea of how the underlying momentum is shaping up. So it's always like trial and error to come to an conclusion of what is likely to work and what is not likely to work. So with that understanding, we go back to the indicator block where we can carry out all these changes and then run the test to see how it might have performed on the historical data. So for today's session, we keep the default instrument as Euro USD. We are not really going to make any changes here. When you have to define the period of the candlesticks, you have to see on which period you want to trade. If it is on the shorter time horizon, then you can choose the shorter time horizons like 10 minutes, 15 minutes, or half an hour. If you want to trade on the longer time horizon, then I think the time frames like 4 hourly or daily will do the job better. So it's up to you to define these candlestick period, but you have to see what is the requirement and then define these accordingly. For today's session, we will take the 4 hourly value. We will also change it on the sorry, I think I took hourly instead of 4 hourly. Okay, we will change it to 4 hourly, 4 hours, and we will plot the chart on the 4 hours as well. You can observe we have the stochastic RSI being plotted in the bottom of this charting, and the signals will be generated wherever you see that the crossover is happening between the fast K and the fast D, and I have explained to you the various combinations which are possible using the stochastic RSI values, the fast K and fast D values. Now coming to the shift is the look back period. Whether you want to take into account the current value or the prior value, you have to define these using the look back period. If you want to do the comparison, you will have to take the different stochastic RSI blocks and keep all other parameters the same, just shift value is different, the look back period is different, and then you will be able to do the comparison how the momentum is shifting. You can define that using the shift the look back period values and then taking the output values and putting them in the if block, and you will be able to do the comparison very easily. Now time period is the RSI parameter actually. If you use the 14, then the RSI will be calculated on the last 14 candlesticks of 4 hours each. If you change this value, the RSI will be calculated accordingly. Say for example, we try with the 21 candlestick period RSI, and then you will observe the change in the stochastic RSI. So here let's try the different time period 21, and we have the plotting of these stochastic RSI with different characteristics. Now there is some change, not much, but there is a change in the plotting. The fast K period and the fast D period is, as I said, is simply derived using the RSI value, and the calculation is provided here how this value is arrived at, and this is very crucial how we define this time period for calculation of fast K goes on to ultimately define the output for fast D as well as the D value is simply the moving average over a given period of time. So we have to be careful while choosing the first K period and see what is the likely combination which is going to give us the idea for profitable trading opportunity. Here we have chosen the 15 and 10 combination. If you want to work with a different combination, we are free to do so. All we have to do is click edit and do the edit, and you will have the different combination in place. 2020, and it will look like something like this. And I think here not many whipsaw trades, and we are getting fairly good amount of good idea of the trend change. So these combinations you will find after extensive testing whether the combination is likely to work or not, and that's why the historical tester is of crucial importance, of high importance. You have to make the combination, you have to design the algorithm using all these indicator blocks and then test it on the historical tester to see the type is working or not. As I said, we can change the value. For example, I'm going to make this 20, and the fast D period as also will be changed to 20. Moving type, I have chosen the T3. You can choose a different one. So we have all these options listed in this panel, and you can choose as per your convenience and do the testing to see if the setup is likely to work or not. Then you arrive at these output values, and as I said, all you have to do is put them in other blocks, the logical blocks or mathematical blocks, to do the calculation. If you want to do the comparison, all you have to do is put them in the A block for the if else statement and see what is happening. So here we have these flows, we have these options of defining the relation between these two output values, the fast K and fast D, and you can choose to compare this fast K with the fast K of another look back period. You can do that as well. So this is only one of the example of how you can use these output values. This is not representative, and maybe in coming sessions we will go in the details of how we can develop the algorithm, but that's for another session. This session is simply devoted to making you familiarized with the basic parameters and the workings of these indicator blocks. And when you want to do the calculation for any output value, you also have to be mindful on how it is being calculated, whether it is on the bid side or on the ask side, as there will be slight difference because of the spread between the bid and the ask. And then the applied price, whether you are calculating the stochastic value on the closing price, open price, high price or low price, also has a significant impact on the output values of the fast K and fast D. Here I will show you, and it will be visible to you. Suppose I change it to high value. You can see the change in plotting of the stochastic RSI. Low price, we have different version. We use open price to some extent. This is different. Median price also. So this is how it works, depending on what kind of price the value of the candlesticks is being taken to calculate the RSI, and then resultant stochastic RSI will also always have the impact. So you have to see what is the applied price which is likely to serve your interest well, and then choose that value accordingly. So that's it from my side for today's session. I hope you have been able to understand the use of this stochastic in RSI block, and you will be using it to design and develop the automated setup on your own. I would say that you do the experimentation and then do the testing extensively to see if the idea is going to work or not, and that's the only way you can figure out the profitable setups. Thank you all for joining in. See you tomorrow. Goodbye.